Question number 23. PL Limited was registered with an authorized capital of rupees 10 lakh divided into 1 lakh equity share of rupees 10 each. From this sentence we got, please write authorized capital equal to 1 lakh equity share at the rate of 10 each equal to 10 lakh. The company offered to the public for subscription 90,000 equity share. We got issued capital equal to 90,000 equity shares. Application were received for 82,000 equity shares and shares were allotted to all the applicants. Share received 82,000 shares, share allotted 82,000 shares. All money due was received with the exception of first and final call money, rupees 2 per share on 2,000 shares allotted to Atis. Call scenario, that is first and final call, 2,000 shares at the rate of 2, that is 4,000. His shares were forfeited. Forfeited amount equal to 2,000 into face value 10 minus call scenario 2. That is amount received 2008 equal to 16,000. Answer the following question. The amount of call scenario disclosed in notes to account will be call scenario bit 1. No call scenario due to share were forfeited. Share were forfeited after forfeiture, therefore no call scenario. Before forfeiture, call scenario available in balance sheet. Therefore answer is C. The number of shares of PL Limited after forfeiture will be, that is forfeiture share also available, number of share after forfeiture equal to 82,000 minus 2,000 equal to 80,000. Answer D. In the notes to account, the amount disclosed under share forfeiture account will be share forfeiture account equal to 16,000 already we have calculated, that is available in point number A. In the notes to account, the amount disclosed on the issued capital will be bit 4 issued capital equal to 90,000 into 10, that is 9 lakh. Available in point number B. Balance in share forfeiture account will be shown in notes to account. In the balance sheet of PL Limited under authorized capital, no. Under issued capital, no. Under subscribed capital. Next. The amount of share capital disclosed in the balance sheet of PL Limited will be amount of share capital. So, amount of share capital subscribed and fully paid, that is 80,000 into 10, 8 lakh, add forfeiture share 16,000. So, total amount equal to 8 lakh 16,000. Question number 24. Pass the necessary journal entries for the following transactions on the dissolution of the partnership firm of Bibha and Ajit after various assets other than cash and external liabilities have been transferred to realization account. It means all assets except cash and all liabilities transferred to realization account already transferred. So dissolution of partnership firm Bibha and Ajit. Asset other than cash already transferred to realization account. External liability already transferred to realization account. Pass journal entries for the following transaction. Creditors owed rupees 46,000, accepted rupees 9,000 cash, and furniture rupees 32,000 in full settlement of the claim. So here bit 1. Creditor, what is the amount? Cash paid 9,000. Realization account debited to cash. Journal entry will pass. Next, creditor to furniture 32,000. Creditor realization account, furniture also realization account. Relation account to relation account, no journal entry. Next, creditor settle further claim 46 minus 9 minus 32. Profit on settlement equal to 46,000 minus 9,000 minus 32,000. 46 minus 9, that is 37 minus 32, 5,000. So realization account debited to realization. Profit on settlement In resolution transfer to relation to relation account, no journal entry. Clear? Bit 2. The farmer stock rupees 20,000. Ajit took over 40% of the stock at a discount of 10%, while the remaining stock was sold for rupees 18,000. Bit 2. Stock to partnership partner Ajit. Rupees 20,000 into 40% minus discount 10%. That is 20,000 into 40% equal to 8,000 minus 10% of 8,000, 800. That is 8,000 minus 800 equal to 7,200. Realization account debited to partners capital account. Stock already in the realization, partners capital, both are different. Journal entry pass. And the balance stock discount 800. Relation account debited stock, that discount or entry, relation account debited to relation. Stock discount is treated as unless, that is also relation, stock already in relation, relation, no journal entry. But balance amount transferred, balance amount sold in cash, that will be in journal entry pass. Cash account 18,000. So relation account debited to cash, journal entry 18,000. What is the amount? 20,000 minus 80% equal to 20,000 minus 40%. 20,000 and 40%, 8,000. 20,000 minus 80,000 equal to 12,000. 12,000 sold 18,000. So profit equal to 6,000. No treatment because profit is also realization. Profit on settlement equal to 20,000 minus 7,200 minus 800. Partner taken 7,200. 800 is the discount minus 18,000, that is 6,000. 20,000 minus 8,000, 12,000 minus 18,000, 6,000, that is profit. So realization account debited to realization. Profit on settlement also realization. Stock also realization. Next, Vibha was appointed to look after dissolution work for which she was allowed a remuneration of rupees 16,000. Bibba agreed to bear the dissolution expenses. Actual dissolution expenses 15,000 was paid by Bibba. As per agreement, the firm will give 16,000 to Bibba. Actual expenses is not important. Therefore, journal entry expense relation account partner Bibba 16,000. Relation account debited to partner's capital account 16,000. Journal entry. Next, Ajit's loan rupees 45,000 was settled at rupees 42,000. So 42,000 treatment balance 3,000 transfer to relation account. Is both will pass. Ajit's loan account cash paid 42,000. Ajit's loan account debited to cash, that is journal entry. And second, Ajit loan profit on settlement rupees 45,000 minus rupees 42,000, 3,000. Ajit's loan account debited to relation account, journal entry. Next, a machine which was not recorded in books was taken over by the BIPA 23,000, whereas its expected value was rupees 28,000. In dissolution, expected value is not important. So, uh, amount not recorded also transferred to relation account and partners capital account. A B machine not recorded taken over by BIPA rupees 23,000. That is partners capital account debited to relation account, journal entry. Next, expected value is not relevant. The firm had a debit balance of rupees 20,000 in the profit and loss account on the date of dissolution. The debit balance of profit and loss account transferred to all partners as per their profit share ratio. Profit and loss account debit balance of 20,000. Partners capital account debited to relation account. Journal entry. In books of Bursa Limited. Journal entry. Date particulars, ledger folio, debit credit. First journal entry bit 1. So journal entry relation account debited to cash. Relation account debited to 9,000 to cash. Creditors accepted cash and furniture in full settlement of their claim. Next, 7,200. Two journal entry pass. On this capital account debited 7,200. Cash account debited 18,000 to relation account 25,200, either combined entry or individual entry pass. 40% of the stock was taken over by the Ajit and the remaining stock was sold. Next third, realization account debited to partners capital account. Realization account to partners capital is 16,000. Realization account debited 16,000 to Bibha's capital account. Bibha was allowed a remuneration to look after dissolution or it is expension on dissolution. AB. Ajit's loan to cash. Ajit's loan account debited 45,000 to cash 42,000 to realization profit that is 3,000. Ajit's loan was settled. B. Machine not recorded taken over by Bibha. Partners capital account debited to realization account. Bibha's capital account debited that is 23,000 to realization account 23,000. Unrecorded machinery taken over by Bibha. Bibha's profit and loss. Bibha's capital account debited 10,000. Ajit's capital account debited 10,000 to profit and loss account 20,000. Debit balance of profit and loss account transferred to capital account. In the absence of interest on profit share ratio, then profit share ratio will be equal. 25A. Past necessary journal entries. Ultima Limited invited application for issuing 2 lakh equity share of rupees 10 each at a premium of rupees 4 per share. From this sentence, we got issued capital 2 lakh at the rate of 10 each at a premium rupees 4 per share with premium rupees 4. So issue price equal to 10 plus 4 equal to 14 rupees. The amount was payable as follows. On application and allotment rupees 7 per share including premium amount 1 rupee. On application for capital 6 per share for security premium 1 per share. On first and final call balance. On first and final call for capital rupees 10 per minus 6 that is rupees 4 per share. Premium is 4 and for security premium rupees 4 minus 1 equal rupees 3 per share. Application was received 2,40,000 shares. Application received 2,40,000 shares issued 2 lakh. Application for 30,000 shares were rejected and pro rata allotment was made to the remaining application. 2,40,000 minus issued capital 2,40,000. 30,000 as rejected means return and 10,000 money will set up an allotment on first and final call. Application rejected 30,000 shares. Remaining share 2,10,000 shares pro rata basis. Share allotted 2 lakh shares. Share set up 10,000 shares. Excess money received in application and allotment were returned. Therefore, this 10,000 share will not set up, that will be also returned. Share set up 10,000 share also returned. Total share return equal to 30,000 normal plus 10,000 equal to 40,000 shares. Cash in arrear. Mandi, who was settled, who was allotted 4,000 share failed to pay the first and final call. Person arrear, that is first and final call money, 4,000 shares. Person arrear equal to forfeited share 4,000 share. First and final call 4,000 share and total shares are forfeited. So forfeited share 4,000. Call capital 10. Security premium not received rupees 3. Allotment money received. Just the call money. So all the forfeited shares were issued at the rate of 4 per share, fully paid up. Forfeited share issued equal to 4,000 share at the rate of 4. Past necessary journal entries in books of Ultima Limited. In the books of Ultima Limited, journal entry. Date particular, ledger folio, debit credit. Bank account debited 2,40,000 share into 7. Debited that is 16,80,000. Will multiply 2 share application and allotment money 16,80,000. Application money received including premium. Then transfer to capital. Equity share application and allotment account debited this 16,80,000. 2 share capital that is 2 lakh into 6 12 lakh. 2 security premium 2 lakh into 1, 2 lakh. To bank, all shares are refunded 40,000 into 7, that is 2,80,000. Transfer of application money to share capital and security premium and excess application money returned or refunded. Next, equity share first and final call 2 lakh into, that is 7. Clear? Total debited equal to 14 lakhs. To equity share capital 2 lakh into 4, 8 lakh. To security premium 2 lakh into 3, 6 lakh. Total 14 lakh. Equity shares first and final call money due. Then bank account debited, cautionary account debited, cautionary 4,000 into 7, that is 28,000. To equity share first and final call 28,000, 4,000 into 14, that is 14,000. So balancing figure debited, equity share first and final call money 14 lakhs. 14 lakh minus 28,000, 13 lakh 72,000. Equity share first and final call money received. Next, equity share capital account debited 4,000 into 10 for future. 4,000 into 10 equal to debited 40,000. Security premium 4,000 into not received 3 rupees debited 12,000. To collection arrear 28,000 already available. To share for future remaining amount, that is 24,000. 4,000 shares forfeited for non-payment of first and final call money. Bank account 4,000 into 4. Issue 4 rupees debited 16,000. To equity share capital 4,000 into 10, that is 40,000. Therefore, share forfeiture account will be set up. Balancing figure debited 24,000. Share forfeiture 24, set up 24. Very nice. Ratio of 4,000 share at the rate of 4% fully paid up. Next 25B. 25B. Pass necessary journal entries for forfeiture and reissue of forfeited shares in the following cases. Marshall Limited forfeited 3,000 share of rupees 100 each, issued at 20% premium for the non-payment of allotment money rupees 30 per share and first call rupees 40 per share including premium 10. From this sentence we got, please write forfeited share equal to 3,000 shares. Issue price 100 plus 20% premium plus 20 equal to 120. For non-payment of allotment money rupees 30. Here not mentioned including premium or not included, so excluding premium. That is collection arrear. And first call rupees 40 and including premium, so rupees 30 plus rupees 10, that is also collection arrear. And second call rupees 20, rupees 10 equal not yet called. The second and final call rupees 30 per share including premium rupees 10 was not yet called. 20 plus 10, 30. Call of capital equal to 100 minus 20 rupees, not yet called. So call equal to 100 minus 20 rupees 8 per share. Share application money equal to rupees 100 minus call allotment money 30 minus first call money 30 minus second call money 20 equal to rupees 20. Forfeited amount of 3,000 shares equal to 3,000 shares into rupees 20, that much amount we have received equal to 60,000 rupees. Out of this 2,000 shares were reissued at rupees 80 per share paid up for 90 per share. So forfeited share reissued 2,000 shares, amount received 90 per share, call of capital 8 per share. So forfeited amount of 2,000 shares equal to 2,000 shares into 20 equal to 40,000. So in the books of Marshall Limited, journal entry The format, date, particulars, ledger folio, debit, credit. Equity share capital account, that is 3000, call up capital 80. So 3000 into 80, that is debited to 1,40,000. Security premium account, 3000, amount not received into 10, that is 30,000. In first call, rupees 10,000 not call but not received. Therefore, we have taken. To calls in arrear, 3000 into calls in arrear 30, that is allotment money, plus first call money 40, that is 70 into 3000 to 10,000. To share forfeiture account, balancing figure 60,000, authorized 3000 into 20, that is 60,000. 3000 shares forfeited for non-payment of allotment and first call money. Next, bank account debited 2000 shares, reissue debited 2000 shares into 90, that is 1,80,000. To equity share capital, 2000 into 80, 1,60,000. To security premium, balancing figure 20,000. Here it is mentioned reissued at 80 per share, paid up 90. So reissue 80 per share, that is 80, and 10 rupees is extra, that is security premium. Clear, because it is call up. Final call till now not call up. Reissue of 2000 share at the rate of 90 per share, 80 paid up. Next, share forfeiture account debited. So here forfeiture 2000 share, forfeiture amount of 2000 share will not set up. Therefore, total amount transferred to capital reserve. Share forfeiture account debited 40,000. Where we will get 2000 into 20, 40,000. To capital reserve 40,000. Balance in share forfeiture account transferred to capital reserve account. Clear? Bit B. Abhiyan Limited forfeited 10,000 share of rupees 10 each, on which the first call of rupees 4 per share was not yet received, and the second and final call rupees 1 per share was not yet called. So forfeited share equal to 10,000 shares. Issue price equal to rupees 10. First call rupees 4, that is call scenario. Second call rupees 1, not yet call. Point out कीजिए. Please point out. Forfeited amount equal to rupees 5 per share. How to calculate? 10 minus 4 minus 1. Forfeited amount of 10,000 shares equal to 10,000 shares into 5, that is 50,000. Out of this, 4,000 shares were issued to Ajay as fully paid up for rupees 9 per share. Fully paid up mentioned. So forfeited share issued 4,000 shares. Amount received 9 per share. So call up capital equal to 10 per share. Call up capital 10 per share. Where will get call up capital rupees 10 per share. Where you will get, because it is mentioned fully paid up. So forfeited amount of 4,000 shares equal to 4,000 shares into 5, that is 20,000. In the books of Marcel Limited, in the books of Abhiyan Limited, journal entry, format, date, particulars, ledger folio, debit, credit. First equity share capital 10,000, call up, second call not yet called. So into 9, that is debited 90,000. To calls in arrear rupees 4. So 10,000 into 4, that is 40,000. Balance amount to share forfeiture account 50,000. 10,000 share forfeited for non-payment of the first call money. Next, bank account debited reissue 4,000 share, 4,000 into 9, that is debited 3,36,000, that is 36,000. To equity share capital 4,000 into fully called up, so 10, 40,000. So difference amount will set up against forfeiture amount. So share forfeiture account debited, that is balance figure, difference amount 4,000. Reissue of 2,000 share of rupees 90 per share, 80 paid up. Reissue of 4,000 shares at the rate of 9 per share. Share forfeiture account 20,000 minus 4,000, so 20,000 minus setup amount 4,000. So debited amount 16,000 to capital reserve 16,000. Balance share forfeiture amount after issue transfer to capital reserve. Balance in share forfeiture account transfer to capital reserve. Question number 26. First line, Aryan and Adya were partners in a firm, sharing profit and losses in the ratio of 3:1. Partner Aryan and Adya, profit and ratio 3:1. Balance sheet available. Next, they was admitted into the firm on 1st April 2024 for 1 by 5th share in the profits of the firm on the following terms. They've admitted gaining ratio 1 by 5 and sacrifice ratio same old profit share ratio, that is 3:1. They will bring capital proportionate to the share in the profits of the firm. Their capital contribution proportionate of his share. Goodwill of the firm was valued at rupees 2 lakh and they will bring his share of goodwill premium in cash. Goodwill in the firm 2 lakhs. Their share of goodwill equal 2 lakh into 1 by 5 equal to 40,000. It is distributed between Aryan and Adya. There's brought goodwill in cash. Aryan and Adya. Sacrificing ratio, that is 3:1. So 4. 40,000 by 4. 3:1. So 40,000 into 3 by 4, that is 30,000 for Aryan and 10,000 for Adya. Clear? Machinery was revalued at rupees 4,50,000. Previously machinery 3,90,000, now 4,50,000. So 60,000 increase. Machinery 3,90,000 increase to 4,50,000. 60,000 increase. Asset increase. A provision for doubtful debts was to be created at 5% on debtors. Debtor already has provision. Now 90,000 into 5%, that is 4,500. Provision for doubtful debt 1000. So balance amount is created. Provision for doubtful debt 90,000 into 5 by 100 equal to 4,500. Less provision for doubtful debt in balance sheet already available 1000. So liability increase 3,500. Next, a liability of rupees 3,500 included in creditors was not likely to arise. So it is liability decrease, creditor decrease. Creditor not likely to arise, 3,500 liability decrease. Next, prepare revaluation account and partners capital account on their admission. Will prepare revaluation account and partners capital account. This data already available. Point out this one. Books of Aryan and Adya revaluation account. Here by missionary account only increase, that is 60,000. To provision about doubtful debt also increase, that is 3,500. By creditor also decrease, by creditor decrease 3,500. Totaling 63,500. Difference amount is 60,000. Transfer to Aryan and Adya. Profit and revaluation transfer to Aryan's capital 3 by 4, that is 15,000. 60,000 by 4, 15 into 3, 45,000 and Adya's capital 1, 15,000. Clear? Next, capital account. This is the format: particular Aryan, Adya and Dev. Particulars Aryan, Adya, Dev. Buy balance brought down. Opening capital 3,20,000 for Aryan and Adya 2,40,000. By workman compensation reserve also distributed 20,000, that is distributed old ratio 20,000 by 4, 5 into 3, 15,000 and for Adya 5,000, 3:1 ratio. Then by premium for goodwill account, 3:1, 30,000 for Aryan, 10,000 for Adya, and for revaluation account, Aryan 45,000 and Adya 15,000. Profit and loss account, debit side balance 20,000 for Aryan 3:1, 15,000 for Adya 5,000. Next close 4,10,000 minus 15,000. So to balance carry down 3,95,000. Adya 2,70,000, 2,40 plus 5, 45 plus 10, 2,55 plus 15, 2,70,000 minus 5,000, 2,65,000. Their share of profit equal to 1 by 5th. Aryan and other share of profit equal to 1 minus 1 by 5th equal to 5. 5 into 1 is 5 minus 1 equal to 4 by 5. Clear? Capital of Aryan and Adya after all adjustment equal to 3,95,000 plus 2,65,000 equal to 6,60,000. That is 4 by 5th. So total capital of the firm equal to 6,60,000 divided by 4 by 5 equal to 6,60,000 into 5 by 4 equal to 1,65,000 into 5, that is 8,25,000. So their share of capital 8,25,000 into 1 by 5, that is 1,65,000. So by cash 1,65,000. 26B. Ashish, Binit and Rima. Ashish, Binit, Rima. All proportion ratio 2:2:1. So 2 by 5, 2 by 5, 1 by 5 we can write. Balance sheet available. Next. Goodwill of the firm was valued at rupees 60,000 and the same was adjusted into the capital accounts of Ashish and Rima, who will share profits in future in the ratio of 3:2. So new proportion ratio for Ashish and Rima 3:2, that is 3 by 5, 2 by 5. The difference equal to 2 by 5, 3 by 5, that is 1 by 5, and beneath minus 2 by 5, 2 by 5 continue, and Rima 1 by 5, 2 by 5 increase minus 1 by 5. So increase means gaining and loss means sacrificing. The goodwill is 60,000. 60,000 divided by 5, 12,000, and here 24,000, 12,000. So beneath share 24,000 of goodwill is distributed between Ashish. Goodwill of beneath 24,000 distributed Ashish and Rima 12,000, 12,000. Value of stock was to be reduced by 10,000. Stock reduced by 10,000, that is asset decrease. Patents undervalued by 20%. What is the patent amount now? 80,000. 80,000 into 100 divided by 100 minus 20 or 80, that is 1 lakh. Patents increased 1 lakh minus 80,000, that is 20,000. Amounts paid to Beneath equal to 20,000 plus 80% loan. Beneath was paid rupees 20,000 immediately on retirement, and the balance was transferred to his loan account carrying interest 8% per annum. 80% loan. In the books of Ashish, Beneath and Rima, journal entry format, revaluation account debited 10,000, to stock account 10,000, value of stock reduced. Then patent account debited 20,000, to revaluation account 20,000, patent undervalued by 20%, now rectified. Revaluation account 20,000 minus 10,000, 10,000, to Ashish capital, that is 2 by 5, 4,000, to Beneath capital 2 by 5, to 4,000, to Dev's capital 1 by 5, 2,000. General reserve credited to partners capital account. General reserve account debited 50,000. To assist capital account 2 by 5 20,000. To business capital account 2 by 5 20,000. To debts capital account 1 by 5 10,000. General reserve credited to partners capital account. In the books of assets Benint and Rima, journal entry continue. Assets capital account debited 12,000. To business capital 24,000. Rima's capital debited 12,000. So business share of goodwill adjusted by assets and Rima in the gaining ratio. Business capital account by balance brought down 2 lakh, by revaluation account 4,000, by general reserve 20,000, by assets capital account 12,000, by Rima's capital account 12,000, to cash account 20,000. So total amount debit side 2,48,000 and credit side 2,48,000, debit side 2,48,000, difference 2,28,000 to 8% business loan account.